Welcome to the 76 Report. I'm Trish Regan. I'm here with my colleague, Rob Hordon. And wow, we're just looking at these numbers fresh off the presses. My gosh. Let me show you. Rob, 61.5% prediction model report. Nate Silver just out with this one. I mean, this is just blowing me away here. Versus 38.3% to Harris. This number just crossing. I mean, we're talking about some serious momentum.
Yeah, it looks like, we're after, well after the Democrat convention. And, I think that RFK endorsement is having a big impact. Had the situation with the 13, Gold Star families inviting Trump and sort of the confusion or sort of exchange of accusations that occurred around that. And I think Trump comes out of that looking a lot better. Versus the way it was spun. And then, of course, just the real issues, right? The real issues that everyone's focusing on again, the economy, policy, where do we go from here? Which candidate's going to be better in terms of managing the country going forward? And
I think that's what it ultimately comes down to. I mean, I think that there was this euphoria. Oh my gosh, we don't have Biden. Thank goodness we don't have Biden. My gosh, Biden, has his own specific set of challenges. And then all of a sudden, they get somebody new and there was this sense of relief. And then they're like, ooh, oops. They saw her at the DNC. I don't think she blew anyone away. And now there's a lot riding, right, on this debate coming up on Tuesday. Because if she doesn't, as I've said, pull a rabbit out of the hat, I don't know what she's got. I mean, 3.5 years, we've got a pretty bad economic state. Frankly, thanks to her policies, for goodness sakes. I mean, Inflation Reduction Act, I won't go there, but I'm sorry. That was a joke and then some, to name it that. Joe Biden actually, I don't know if you saw this, they caught him yesterday admitting, that it basically was just a whole bunch of, they should have named it something else. Yeah, you should have, buddy.
Yeah. It was funny. I mean, I remember at the time, it actually never really was an Inflation Reduction Act. At the time, it was always Green New Deal and a climate bill at the last minute. And I'm just remembering a couple of years ago, maybe you remember this too, they did rename it. And we're like, why did you name it that? It had nothing to do with it. And there was and inflation was just sort of an emerging problem. Mm-hmm. But now, a few years later, in retrospect, it's sort of the mislabeling really kind of
comes back to haunt them.
Yeah.
Yeah, Kamala Harris is speaking with some members of the media. She did, I guess, 2 radio interviews today in these little tiny markets and states that she needs to try and influence. And they did not go well. They really didn't go well because she was asked about her specific economic policy and she had no answers. She went right back to, he's bad and I'm good. And I just think that people went through that already. And that's perhaps, not that the Democrats take my advice, but my advice would have been, number one, you primary Biden. You never should have had him running in the first place. Number two, you get somebody right in that primary who actually Democrats want in the seat and you rally behind that person. And then 3, you make sure that person has a specific set of proposals. I mean, there's not even any policy on her darn website and is able to articulate those proposals. They haven't done any of that. So when I see this Trump momentum, it makes all the sense in the world to me. It actually didn't make any sense that she was seeing momentum. Although in retrospect, I guess it was just relief.
Yeah. I mean, perhaps the more she's in front of the camera or just now starting to communicate with the outside world, the more trouble she gets in, right? Or the more skepticism it generates.
So, okay. I agree with you. I think that, as far as the economy, et cetera, she's just kind of out of her league because she's dealing with a guy who's actually thinking about some really innovative things. I'm just trying to pull up some sound that we have of him. He was at the New York Economic Club this week and had kind of, in my estimation, some pretty innovative ideas. And I credit him, with that, right? Because, hey, we could use a little innovation when it comes to our government. One of the things that he talked about was actually the creation of a sovereign wealth fund by way of tariffs. So everybody's like, oh no, we can't have tariffs because tariffs are inflationary. The thinking being that, you know what, if you're importing goods or widgets from China and suddenly the government slaps on a tariff, that you're not going to buy as many, or you may still buy those widgets, but it's going to be painful to you and your family in that it would cost more money because those costs do get passed on. And he's like, no, you know, we did this before. I had the most tariffs of anyone. Did you see inflation? No, you get inflation now. Here, let's watch the sound and you react.
Smart tariffs will not create inflation. They will combat inflation. I had almost no inflation, and I had the highest tariffs that anyone's seen, and they were going a lot higher. Foreign nations will pay us hundreds of billions of dollars, reducing the deficit and driving inflation down. It'll largely reduce our deficit. In my first term, we imposed historic tariffs with no effect on consumer prices or inflation. The anti-tariff people, many of them, I believe, honestly work for these other countries in some form, get tremendous amounts of lobbying money and other money because it doesn't make sense what they're saying. But we had no inflation, and we had protection, and I saved so many industries. I saved the steel industry. But Biden and Harris are letting it go. They're letting it go. It's so easy.
Okay, so he's making some interesting points there. Actually, I would say, interestingly enough, Biden and Harris and Trump are all in agreement on that steel deal that we probably actually want to have happen because it would mean more investment in U.S. steel. But that's neither here right now. Neither here nor there right now. But I'm curious to get your thoughts on. And you have a background in economics and obviously a background in investing, et cetera, et cetera. So look at what he's proposing. Do you think that that's something investors would ever be interested in? I mean, we do have treasury bonds, right? How would a sovereign wealth fund be different? We run massive deficits. He's talking about the creation of this whole new vehicle.
Yeah, you know, it's really interesting to see. I mean, he's always, one thing, you know, about Trump is that he's always kind of generating kind of original ideas and approaching things out of the box with, you know, sort of an entrepreneur's spirit and trying to think of solutions to our problems. And, you know, I think, you know, like him or hate him or whatever, you know, you got to acknowledge that he has sort of this creative mind, and he's thinking of, you know, new ways to approach things. And, you know, it's like, let's think about it. Like what, you know, maybe we do create a specific investment vehicle that can address the infrastructure challenges of the United States, and we fund it, you know, with specific mechanisms. You know, what do we do now, basically, in terms of our infrastructure funding? We have this, you know, highway trust fund. It's funded by gas taxes. These gas taxes have actually not really moved in absolute terms in like decades because it's politically so difficult to raise the gas tax. And that's like the key reason why we have this underfunded infrastructure. So if we can develop an alternative system that, you know, has a different funding mechanism that perhaps takes advantage of private capital, like they do all around the world to develop and fund airports and roads and ports, you know, it could be very.
I mean, I've seen it at work, for example, in Chile. I mean, Chile is in kind of a different spot right now, but you know, they had beautiful roads you see in Europe, right? Beautiful highways, beautiful roads, you know, some really nice airports. I think you told me all about the Frankfurt airport. In other words, these are privatized entities in partnership with, not that we want to be Europe, right? But they are perhaps in some ways taking advantage of some more innovative approaches to dealing with infrastructure so that you get some capitalism in there, right? Like somebody's going to make a profit. Otherwise, you know, nobody really cares.
Yeah, no, it's actually, I mean, we kind of knock Europe every now and then, but, you know, in many ways they embrace, when it comes to infrastructure, I think they're more capitalistic in their approach than we are, where all of our infrastructure is really kind of completely publicly controlled and financed. They've got toll roads that are privatized. They've got, you know, as I mentioned, airports. And so what happens is like the government will own maybe like a majority stake in the public entity, but it trades as a stock and it's privately managed and there's global shareholders and they borrow money from, you know, the private sector, and they fund themselves through a lot, like at the airports, through like retail operations and through, you know, passenger fees and air handling fees. And and they actually tend to be run very efficiently because they're basically private sector companies that are owned in part by.
I mean, think of how
government.
exciting that would be for investors, just for a second, right? Like, this is kind of a very new sort of product. Look, he had a lot of success with those opportunity zones. Remember, in some communities that have been really challenged, he's like, hey, let's create an opportunity zone and really try and encourage capital to go to work here. So it's good for investors. It's good for the community. We're getting a lot of tune in from folks. John saying that he's all set to roll over his IRA into one of our portfolios. What I would remind you of, John, is that we don't actually manage any money. Rob and I have a view, and look, investing is risky. go read the disclaimer, right? So you just, you need to understand your own tolerance for risk, et cetera. All that in mind, I would say that, you look at, for example, we just closed out the last 3 months, and this is the income builder portfolio with a median stock return of, let's see, what we're at, roughly 15% versus the S&P at 6%. So my thought for people is, and part of the reason we started this company is so that you can start taking investing really into your own hands. And if Rob and I can help you in any way, we have these model portfolios set up where these are the stocks and the companies that we are big believers in for the future. And so there's 3 opportunities: American resilience, you have the income builder, you have inflation, the inflation protection portfolio. You can get all of them if you're part of our founders club. And then you are then, doing that investing. And I just think it's so critical that people keep that front and center on the horizon, because look, you look at the inflation that we have in this economy, you look at what Harris and Biden have done, and they've really squandered this opportunity. And I am of the belief, Rob, that, certainly over the long term, and you can't time the market, I get it, but that's where that appreciation is going to come from, that's going to help you keep up with things like inflation. And you look at the market over the last, even with Kamala Harris and Joe Biden in the seats, right? The market still did well. It's innovation.
Yep. And, right now, when we look at markets more broadly, we're in this situation. The S&P had a bit of a difficult week this week, trading off a few percentage points, various reasons. But, today we had that jobs report, and it's like this tug of war between, is bad news good news or bad news? Obviously a weakening economy and declining employment, that's signaling like maybe the economy is not in strong shape and we're, at risk of. The other hand, this is what triggers interest rate cuts. Cuts are very favorable for equity investors. They're favorable for almost investors in.
So if you own stocks, translation for, folks out there that are just getting started. No, I mean, the equity market, the stock market, right, has benefited from these lower interest rates. It's so fascinating because the Fed is like trying to do the right thing, right? They're like, okay, we need to make life easier for everyone, especially the middle class. And yet what happens, Rob? Life gets harder for the middle class, and asset prices keep going up. So who does it benefit? Everybody on top. And then as long as, they're willing to give you enough handouts and let them eat cake, Kamala Harris or Nancy Pelosi, we're going to give you this, we're going to give you that. On the bottom, those people are taken care of, but those people in the middle, they're the ones feeling the pain, especially if they're not invested.
Yep. So, when the way I'm sort of looking at the market right now in the context of this struggle, between recession versus interest rate cuts, what could happen is, you have the Fed is very sensitive to the jobs situation, right? You don't want spiking unemployment, and it has a dual mandate. And I think the reality is inflation could be neglected as the Fed, kind of makes sure that we've got full employment, and that might translate to tolerating higher levels of inflation. There, by bringing interest rates down to a level that supports that higher level of employment. So that is actually like it might not be a good recipe for stopping inflation, but it is a recipe for, helping stocks and, some sectors more than others. But, if you have low rates and, you have a supportive Fed that's sort of buttressing the economy, you could kind of sustain rising earnings, but lower rates, bringing down the cost of capital, helping with multiples. on earnings multiples.
It should
that's
be,
sort of
in other words, it should be one of those things that kind of gives a little bit of wind in the sail, so to speak, to the stock market when the Fed starts this rate cutting venture, which I think, given today's jobs report, 142,000 jobs being added to the economy in the month of August. We saw revisions for June. We saw revisions for July, all revised lower. This comes on the heels of them revising the big revision, right, that came out for the whole year. And I just say, I don't think it's enough. I don't think 142,000 jobs is enough to really fuel job growth in this economy. Now, I mean, I hope I'm wrong. Listen, I mean, the one thing I want is for the economy to do great and to soar, and for all of this to work out splendidly. It's in all our interest for that to happen. But 142,000, I'm not buying it.
Yeah, and I think Jerome Powell, he expressed himself the other a few days ago, 2 weeks ago at Jackson Hole. They've got eyes on this, and they see really a deteriorating employment picture. One of the interesting things I picked up from one of the Fed banks, some economic research that they put out, we've really burnt through, the economy really, and this is part of the reason we had inflation, is we had all of the stimulus money, which kind of filled up the coffers of consumers, at the time, and they've burnt through it. And now they're, in debt, and credit card delinquencies are going up. So that savings is being burned through. It already caused the inflation. The inflation itself is sort of a challenge for consumers, as are high interest rates. And now we're looking at really kind of an economy that, after a few years of this, the consumer is kind of running out of steam, and we're starting to see job losses, and the Fed is pivoting. And a lot of people are saying, look, there's genuine recession risk here. So when I mean,
that's actually really important, like that recession risk, and it's dicey, right? Because you're going into an election season, so they don't even want to hear R when it's not an election season, the R word, so to speak. But I think recession risk is a fair thing to put on the table right now. Again, I'd have to see some more by way of consumer spending numbers. But, if you continue, inflation has come down a little bit. And when I say it's come down, by the way, guys, like, it hasn't really come down, because it's all cumulative, right? So if you're just no longer up at 9%, which is where it was driven in the initial year, the first year of this administration, it's down. But you're at 2.9%, and that's on the heels of what you were the month before and the month before that. So yes, okay, maybe prices are leveling off here. But, I don't see the economy having quite the buoyancy, except if we go into this sort of new, Web 3.0 scenario, where you're turning once again to the growth in this AI, which I think is just phenomenal, And for anybody who's like, oh, I don't buy it, I think AI is going to be incredible. And I've told you this story many times, Rob. I've told the viewers, I went to the Apple store and I tried on the Apple Vision Pro goggles, and wow, I'm just like, this is just the beginning. Everything's going to change. It's going to be incredible how we communicate with each other, but how everything's done. Someone had mentioned to me, actually, at the Apple store, the guy, I've done this twice now. I keep going back. Maybe I'll go back again this weekend and talk to somebody else about it and try it out again. There's not a lot of applications for it right now, so it's not like something you would buy, but it's so interesting to see. And if viewers are watching, I encourage you to do that, because it's just so cool, and it gives you some insight into all that can be. And he was saying, look, you could actually operate, believe it or not, on people. He was thinking about the medical applications, because he had a medical background. I mean, I'm thinking about the television implications, meaning streaming applications, meaning, hey guys, you know what? You can be right here in the studio with me. This is like teleporting a la Star Trek or something. It's just incredible. So I see it from a media perspective. I see it from a sports perspective. You can be in the game almost with the players. And some people see it from just all these other perspectives. But it's incredible. I mean, and it's just starting. So when I look at the economy faltering, I think I take a little bit of solace in the fact that there's a lot coming our way that we don't even understand or fully know or grasp just yet.
Yep, and every industry will be affected and will participate, and a lot of companies across industries will benefit. And we're definitely looking out for the ones in all these different industries that are really going to benefit. It's fascinating to think about AI in the context of the last few years, because it's really unrelated to like what's going on with the political environment or the macro, right? You had this AI technology, what Jensen Huang did at Nvidia and kind of to grow that business and develop these GPUs, that really had nothing to do with like who was in the White House or not, right? So you had this kind of AI wave and boom, and that's just separate from what's going on in Ukraine or the society, right?
The border or the economy in general. Mm-hmm.
Yeah, so
it's like innovation just keeps happening.
But it's really been an important driver of our economy. So the strength that we are experiencing in the economy is really, to a very large extent, like,
are those productivity gains?
What's that?
Are you talking about productivity gains?
No, it's not even. I don't know that the productivity gains have even arrived yet, because what they're doing now is they're really building out like the capacity. But I think I'm thinking more just in terms of like the wealth creation from the AI stocks or the hyperscalers. Nvidia, the capital that they're putting to work to build out the AI processing capability that eventually will have these applications. And I think the market's wrestling with, well, what are the applications? When will we see them? How much money will they make? Are they going to be really, all they're cracked up to be? Those are fair questions. But I guess I'm just making the point that, sustaining the US economy now is this very serious hundreds of billions of dollars being plowed into developing, these.
Yeah, AI. And I'd like to see, Intel have a better shot here. I mean, AMD has some strengths to it, but when I look at Nvidia, it's just been a wild story. I mean, we can get to the government and actually is kind of going after Nvidia right now, and we can talk about that. Apparently, you can't make that much money, or you're going to attract some attention. But all that aside, are there more players in this space? I mean, do you think that the Intels, the AMDs, other companies sort of coming along, or has Nvidia just dominated it so much? I guess this is the government's concern, that it just kind of owns it all.
Yeah, so the Nvidia apparently has received subpoenas, although maybe they denied it. I'm not 100% up to speed on where the legal process stands. But the government, the Justice Department, is, to some degree, is like investigating and trying to figure out, basically why do they have like 90% share of this kind of GPU market? Are they freezing out competitors? Are they making it difficult for their customers to use alternative suppliers? These are the kind of the questions. I think there's a small acquisition that NVIDIA is looking to do. So these are the questions that the government is asking. And it's not surprising, given how immensely.
By the way, I just, in fairness, right, to the Biden administration, because people accuse me of not always being fair to them. Look, I mean, these are things that, if they are, doing things that would be monopolistic in nature, trying to corner the market and doing things to exclude everyone else, then no, that's not good. We don't want that. That inhibits, right, the innovation. And we want this growing and growing fast, because I do think it's going to take our economy to new levels and new places. Simultaneously, some people are like, wait a second, why are they going after like the one big profit driver right now? And so I think, unfortunately, the government's sort of always behind the eight ball. And when it comes to tech, I think they're really behind. But in fairness, you've got to also make sure that you're creating a very competitive landscape.
Yes. And ultimately, I think it would be very advantageous for the rest of us outside of NVIDIA shareholders if there is competition for GPUs, right? Not so much because the government's going to force it, but just because AMDs and Intels of the world like come up with strong alternative products. Because in that scenario, then you just have more GPUs on the market, right? They're cheaper. The profit pool, it's like NVIDIA is not just making all the money off of AI, but it's sort of being shared with other players. And that's where you really get even more, productive investment, right? When we start to costs come down and we can develop AI more efficiently. So
Somebody has a great story, right? Like, I mean, I remember it some 20 years ago, even longer ago, when I lived out in the Bay Area in California. And, it was just kind of a teeny little company, semiconductor company. It wasn't that big a deal. And like just all of a sudden, right, in the last few years, it's just shot forward. What is it that their founder kind of knew and got, in your estimation, ahead of everyone else?
Well, look, I mean, it was always really like just a video game company, right? Like making the technology that supported graphics in video games, which is and it made a lot, it was a very successful company doing that. And that's a very large market. But in the past few years, they've made this transition to AI and applying that same technology that was used for graphic processing, to machine learning and to all of these new applications. So I mean, maybe to some extent they got lucky, but it's I don't think it's luck. I mean, it's a tremendous innovation, and they're breaking new ground. I don't think there's precedent in technology for what we've really are seeing now with Nvidia.
I don't think so either. I think, and by the way, let me just underscore that point for everyone. As investors in technology, of which Rob and I are, and even if you don't know it, you probably are if you have a 401k. And if you don't have a 401k and you're not invested in the market, I really do encourage you to be thinking, if nothing else, about something basic like an S&P 500 index fund. Look, I think that I want to just take a minute to emphasize what you just said, because I don't think, maybe other than the onset of the iPhone and the technology that came forward as a result of that phone where you could suddenly do all this stuff, I don't think we've totally processed how much of a shift and a change this could be.
And how quickly all this market value was created. I mean, the trillions of value that Nvidia has created, I mean, it's obviously given up a lot in the last few weeks from its peak levels, but still, I think well over 2 trillion market cap. I don't think we've seen this so much like on the hardware side, where basically they're providing hardware, like an innovation in hardware that is just where there isn't really strong competition, and the product is so immensely valuable to the customers that it's just propelled enormous revenue and profit growth in just a few years. It's a stunning business story.
I'm going to ask how nervous it makes you, but not specifically within that company. Look, I think Nvidia's tricky at these kinds of levels, right? I know you bought in a couple of years ago when it was a pretty good deal, but it's not part of our American resilience portfolio, which is the growth portfolio. And there's a reason for that, in part because it is so highly valued. It is very high beta, but you don't necessarily have to be in Nvidia, I don't think, to believe in this overall momentum of where technology is taking us. And there's plenty of different offshoots. And we've seen this historically, right? Like if this is the biggest change and the biggest shift, there's going to be a lot of opportunities around this space. But, some people say, oh my gosh, the market, can we really support these valuations? I guess it's to some extent anyone's guess, but I'm just going to give you the Trish Regan sixth sense, which has historically been amazingly quite right. Like in 2000, I'm like, this is ridiculous. This is absolutely ridiculous. Like sneakers.com, like this is, what are these .coms? Like this is totally ridiculous. I had no faith in that. And I was right. Like it was a complete total bubble. In '08, I was so frightened. Like I was frightened in '06 for '08. I might have been frightened in '05 for '08. I was like, this is not good. This is not good. This is not good. The no income, no asset loans that we were giving out, and this idea that we were diversifying risk by everybody having a share of these things. I'm like, this could go really, really badly. So I nailed that one. And then, when the Bitcoin as well, I was like, this is amazing. I loved it at $10. I look at what's going on right now. I'm excited in a way that I don't think I've ever now look, I could be, maybe it's all baked in. That's what the bears would say, right? They'd say it's totally baked in and the market can't sustain these levels. And I sort of would come back and say, I don't think we've totally understood what this economy and this innovation is capable of. And that's what excites me.
Yeah, once we really start deriving the benefits of these technologies. So I think where the risk is, like you look at the Mag 7, and that's like a third of the S&P 500 by market cap. Mm-hmm. And what the Mag 7 really consists of now, it's Nvidia, which is making the GPUs. And then it's the other 6 companies, more or less, that are buying the GPUs and building out the data center capacity. And that's what's driving those stocks as well, right? So that they're going to be able to buy the GPUs and then, kind of in one way or another monetize that capacity that from the processing capacity that they're investing in. But then there's the rest of the economy, which will be like kind of downstream from that, and sort of the customers of these hyperscalers who are themselves the customers of Nvidia. And once you start really deploying AI technologies across the economy, that's where I think we could see very significant productivity improvements and new market opportunities and use cases. So, there's a distinction to be made between, the companies at the very, very top of the food chain when it comes to this AI revolution, and then other companies that aren't, quite as getting as much valuation uplift from this trend.
It's tricky though. Like, you think about it. Google was once the upstart compared to Ask Jeeves. I don't know if you remember Ask Jeeves. We'll see how old the audience is, if anybody remembers Ask Jeeves. But I remember Ask Jeeves, and this is around, 2000. There's winners and losers in anything. And it's sometimes sort of obviously hard to know, right? Like, hindsight's 2020. But you think about the AOL Time Warner deal. There's just like a lot of times that we've been really excited about the future and what's coming, and for good reason, right? Like that was a major shift, and moving to this internet economy certainly was a big, big deal. And then the onset of the iPhone, and but this is, to me, I mean, I don't need to belabor this, but I'm sort of like, wow, like. This is a whole other level. I mean, it's incredible.
If we go back in time and look at those other two periods of market crashes, like the late 90s and the tech crash, and then the financial crisis, there were elements of fraud and deception and total, BS, for lack of a better word.
Remember Henry Blodgett? Lipstick on his pig kind of thing. He now runs Business Insider, by the way.
I started my career in that at that time, and had a front row seat actually when I was at Credit Suisse, and really kind of witnessed it. And
was Mary Meeker? No, she was Morgan Stanley. Forgive me.
Yeah. I was working on the telecom team, and I guess I would just say, in retrospect, we all know, going back to the late 90s, these were ridiculous business models. Not all of them, but there was so much hype. None of it made sense. The numbers didn't add up. The valuations were ridiculous. So, there was an element of fraud in that. And there was an element of kind of like venture capital taking advantage of retail investors through the IPO market. So that all blew up. And then again, in the housing crisis, there was another element of like Wall Street
taking
fraud.
Advantage, right? Again, of like people who could not, subprime mortgages. It shouldn't have been, I hate to say this, and, people freak out, but not everybody should buy a home. And by the way, it's not always in everybody's interest to buy a home. But they for some reason, Barney Frank and the rest of them were like, no, we need everybody to buy a home. And, and they're doing it again, by the way, total aside, like out in California, they're trying to say, okay, like we're going to have home loans for migrants. Like, so you're not even here in the country legally, but somehow we're going to give you a mortgage. I'm like, no, we've seen this movie before, guys.
Or even with the 25 grand for first-time home buyers. A big part of the financial crisis was like lending. The banks were lending money to people who had no business having money lent to them. And they didn't have the assets or the income to support it, but they were doing it because there was this fraud going on where they were able to sell the mortgages to these, these collateralized debt obligations and these funds. And everything was levered up 30-1. And that's why we had that crisis. It was a completely avoidable catastrophe. None of it had to happen. So, in those two major stock market catastrophes, there was really this kind of element of deception and fraud and kind of financial tomfoolery, right? But I think now, you could say that with Nvidia and these hyperscalers, maybe there's a degree of hype around AI, but it's real money. It's the industry juggernauts putting the money to work.
Real money. No, you're right. Think about, like, say what you want about Mark Zuckerberg. He's not a dumb guy, and he clearly is very, very, very focused on this. In fact, he's been challenged, at least maybe we're going back about a year and a half or even 2 years ago, but there was concern, right? That he was so focused on that was totally where he was, burning money because he wanted to be first to the table because the opportunity, right, is so great. And the same thing, you look at Elon Musk, brilliant guy, devoting so much in terms of resources to AI for Tesla, for example. I mean, right across the board, right? You've got really, really smart people that are like, this is where we see it going, and they're putting assets there. So it's, money where your mouth is, as opposed to sort of the shenanigans that you're referring to in sort of other moments.
Yeah, and they're building out the AI infrastructure really for the rest of us. So they're putting the capital to work, and if they're over investing, then I mean, to some extent, there's that comparison to like the fiber build out from 25 years ago. That capacity is sort of the economy's asset, and the rest of the economy. Maybe these aren't going to be the best investments for the hyperscalers, but we'll be able to kind of take advantage of that capacity.
Mm-hmm. So long term, then you obviously, we like tech, but we like sort of the opportunities around it as well.
Yeah, I think people should focus now. The economy's in an interesting spot. You've got this recession risk, but then you have the opportunity for rate cuts, which could be very supportive for valuations. You really want to own, for lack of resilient businesses. I mean, that's why we kind of chose, and there's really not a bad time to own resilient businesses, to be honest. But, particularly in this environment where you have, potential macroeconomic weakness because of a slowing economy. You want these business models that will be intact, that aren't really hypersensitive to shifts in demand and the strength of the consumer. Those are the kind of companies we have in the American Resilience portfolio, but also the type of companies we have really across the three strategies. And, if you have kind of resilient earning streams and declining interest rates, that's a pretty good long-term recipe for improving valuations.
What do you think the biggest hindrance is to the AI revolution? I mean, what could get in the way in your view of all this? I know what I think. I'll just blurt it out. I think there's a danger of like too much regulation. Obviously, I'm not saying it's the Wild West. You do need oversight, but I do worry that government involvement just might do. I don't think it's going to happen because I think that actually these investors are so much further ahead of where the government could ever be, that and that's part of what has been such an engine of innovation is what has powered the U.S. economy now for so many years. But what's your view? I mean, other than war with China, which all bets are off the table at that point.
Yeah. Thanks for reminding me about that one. Yeah, I mean, with all of Nvidia's products.
That's why we like gold.
Manufactured in Taiwan, that would be very extremely disruptive to the AI rollout. Obviously, government heavy hand of government regulation interference would be a problem. I think from on the market side, I mean, there's this ongoing debate. Are the applications there? Are they overbuilding the capacity? So maybe there's this period, and a lot of people are talking about like maybe we're going to face a period of digestion where, okay, guys, you got a little ahead of yourselves. You bought all the GPUs, you built out all the data centers, and
do you think that's what we're seeing right now? Like when you look at the market, it was in part, I guess. I mean, the market's so wild these days and counterintuitive that you would have seen the 142,000 jobs being added and said, woo, the Fed's definitely game on. And therefore, you'd want to be partaking in the upside that one would expect the market would eventually see, that windfall as a result of lower interest rates. But, people are we saw this last month too, where people suddenly like scaled back.
Yeah. I don't think there's any signs in the market that the AI investment boom is slowing down. I think there's signs that other parts of the economy are slowing down. And that was even, I think in like the Broadcom earnings results this week, that like their other businesses are the ones that are sort of suffering. And so like that's sort of a theme, right? Because the AI is still going full steam ahead, but the rest of the economy is kind of struggling under the weight of super high interest rates. We certainly see that in the housing sector, where mortgage rates have been so high, and that's hurting demand. And in general, it's the consumers being squeezed. So I think it's like a bit of a bifurcated economy at this point. You've got tech, kind of continuing to have strength and momentum in terms of the underlying economy, not the stocks necessarily, via investment in AI, but then sort of maybe kind of like the late 90s, the old economy, struggling under restrictive monetary policy, which is now changing.
Yeah. I mean, they're about to get more liberal in that sense. And I think there's some frustration. Let me see if I have the sound for you, because I got a kick out of it. Jared Bernstein. I don't mean to pick on Jared. I've known him for years. He used to come on my CNBC show a lot, also on my Bloomberg show, but we could always count on like a really good powwow with Jared. Like you'd put like Jared on and Steve Moore or somebody, and it was always very entertaining from a viewer's perspective. So Jared's like very, very left. He's a former music major. Nothing against them, right? I studied music. Anyway, he went to Manhattan School of Music, and then he went to Columbia, where he studied to become a social worker. So he went on MSNBC today, and this is interesting, Rob, because he's doing an interview with the wife of the former Fed chair, which is just a little inside baseball if not everybody knows that. So Andrea Mitchell's married to Alan Greenspan, and she gave him an out. Like, it's a bad jobs report. You only created 142,000. Like, what do you think? Is it the Fed's fault? And he didn't take it. I think it is in part the Fed's fault. Anyway, here we go.
Is this cooling off worrying? Is it possible that the Fed went too long in keeping rates high?
Look, I think 142,000 jobs that we got in August, that's demonstrably strong enough to keep the unemployment rate from going up. And in fact, the unemployment rate ticked down from 4.3 to 4.2. No question, that's a slower pace of job gains than we saw, but we were sustaining a breakneck pace that we knew was going to slow down. I think the operative question here, Andrea, is are we generating enough jobs to give people ample opportunities in the labor market to keep the unemployment rate from going up and to especially maintain those solid wage gains that you just mentioned, with wages up about 4% on a year-over-year basis. That's well ahead of inflation, which was last seen at below 3.
Okay. We're going to have to listen to that. But, just for what it's worth, I will show people this graphic because I don't need to show you a graphic. I'll just tell you. Wages are actually vis-a-vis where we were like 3.5 years ago, down some 3.9% real wages versus where they were in comparison, which was up better than 8%. So, look, it's spin, but I just got a kick out of it because, maybe Alan has been telling her at home, for God's sakes, when is Jerome going to move? Like, when is he going to move? So she gave Jared the out. She's like, it's the Fed's fault. But he didn't, he just, sugarcoated it. It's everything's great. No worries.
Yeah, at least he didn't start explaining MMT again.
Okay, inside baseball. For those of you in the know that watch this channel a lot, Rob and I did a whole thing on that because he kind of got himself in a little bit of a hole when he was trying to explain how the Federal Reserve and money printing and interest rates all worked. So that's what Rob's referring to.
Yeah, it's sort of a walk down memory lane there.
Yeah.
But I think it's important to realize, the purpose of this restrictive monetary policy has been to slow down the economy. And you do that by, kind of making the employment picture not as strong by, in fact, putting downward pressure on wages. Wages can drive up inflationary pressure, rising wages, the wage price cycle, right? Mm-hmm. So, this is sort of what the Fed always intended to do. And now it's coming to pass. And the question is, are we going to have a soft landing or a hard landing?
Well, we'll see.
It is the Fed.
This is why, maybe it's time to put a little innovation in. we need this innovation right about now, which gets us back to sort of the interesting things that Donald Trump was talking about, the sovereign wealth fund, tariffs, using trade and tariffs in an innovative way. But, look, I'll just say this, and it's been my experience. We do a lot of things really stupidly. We don't have the best talent at the Treasury Department. Sorry, but a lot of people that want to go and work in government, like they want to be in the sort of West Wing, right? Or they want to be in the State Department. And for whatever reason, we're not getting the best and the brightest at the Treasury Department. And that's a concern, because I think you really need to be smarter in terms of, Treasury, and also working with state to think articulately about how you're really going to influence international policy. I'll leave that for a minute just to get back to some of the comments and suggestions. I mean, Peace of Mind asking sort of about the AI applications, like, are we going to see a lot by way of applications? And I would just say, Peace of Mind, that's an interesting question. And my frustration when I went and tried on those little Apple goggles was that there was really no way to do anything with them. Like, I mean, you can't, you can buy them. They're like a fortune. They're $3,500. That'll come down too, by the way, in time. But, we've got, I think I'm on television coming up right now over on Newsmax. That was my alarm reminding me. But I would just say that there's so much opportunity that is going to be coming our way. And it's exciting to think about. But we're not there yet. I mean, when I saw what they were offering, for example, on Apple, it was very little. So you wouldn't buy that now. There's no reason to.
Yep, it's definitely like a little bit early days in terms of the applications. But I think investors should really look for companies that are well positioned. I think a lot of software companies, we own one in the American Resilience portfolio that we talked a little bit about in the most recent monthly report, where they are rolling out AI technologies and AI. So they're not the AI, they're not a hyperscaler, but they're kind of taking advantage of AI to better serve their customers, to get forge deeper relationships with their customers and become stickier and grow their kind of revenue opportunity. So I think it's early because that capacity is getting built out, but people should look for companies that really have genuine opportunities to take advantage of the technology for the benefit of their customers.
Yeah. All right. Well, look, it's pretty wild this point in time. I would encourage everybody. We have 76 Research there. You can get this for just the 76 report you can get for just $1 a month. It's code word dollar, DOLLAR. We'll give you that. And you can go to the website and get this research. It's just $1 a month to start. I should make clear, for the first 2 months, and then it goes to $9.95. But this is good. I mean, I think hopefully you'll come away with a lot of ideas. And we put a lot of care and effort into what we're thinking about in terms of what the opportunities are right now. Or you can sign up for one of the model portfolios, or you can get it all, like just the whole shebang, if you get the Founders Club there at 76 Research. Anyway, Rob, always a pleasure to see you. We'll have a lot more content coming out, so I encourage everybody to subscribe to the channel, to hit the bell so you know when we're live, which is, at least once a week we're here, and you'll get all the other content as well. So do us that favor. And Rob, have a wonderful weekend. I know you've got some travel coming up, so we'll see you right back here fairly early next week.
Have a great weekend, Trish.
Thanks.